I would be patient and stay long, because I think the likelihood that we see a blow-off move upwards is far higher than we see on the downside, and probably of a greater percentage change in price.
Hi everyone, welcome to Bits and Bips, exploring how crypto and macro collide one basis point at a time. Today we're going to talk about a whole bunch of things, mainly the Trump and Musk blow up, the Circle IPO, some macro topics, and again, Bitcoin treasuries continues to be a hot topic. But first, some quick intros. I'm your host, James Seyffart, TradFi Archmaester, Lord of Bloomberg's End, here with Ram Alawalia, Maester of Wealth, leader of Lumina.
How's it going?
Steve Ehrlich, High Scribe of the Unchained Crypto Kingdom. And then also joined by Sal Ternulo, First Counsel of the Venture Court at A100X Ventures.
Good afternoon, everyone.
We're here to discuss the latest stories in the worlds of crypto and macro. Just remember that nothing we say here is investment advice. Please check unchainedcrypto.com/bitsandbips for more disclosures. Before we begin, let's take a minute to hear from the sponsors who make this show possible.
Crypto moves fast. It's why Bitwise launched the weekly CIO Memo, a jargon-free summary of what's moving crypto markets, written by one of the best in the business, CIO Matt Hogan. Get up to speed in 5 minutes or less. Check it out at bitwiseinvestments.com/CIO Memo. Carefully consider the extreme risks associated with crypto before investing.
All right, let's get into Elon and Trump. I have a take on the market angle here, but I don't know. Obviously, this is also just like drama, but it's kind of like when I was watching this stuff blow up, it was like it was so viral. It was so intense. It was like I don't know, Bravo Housewives type stuff, but with people that actually matter. So let's just get into it. What's your market take here? We'll go to you, Ram, first. Do you have an overarching take of what's going on here and how it impacts markets?
There's no real market impact. There's no what drives markets are earnings growth, inflation, policy. This is a tempest in a teapot. It really impacts Tesla more than anything else. But even then, as it relates to Tesla, it's not impacting Tesla's long-term or short-term earnings growth. So, you got a short-term reaction on the late tail of last week when this was brought into the public eye and Tesla sold off. But those are just short-term reactions. It's not an enduring reaction. I have a few questions. One is, I want to know, how did Elon really get that punch in the eye? It's not his son, which he claims. Was it Besant? Was it Navarro? It's one of those two, I believe. It was notable that the All-In show did not have a pod this weekend, right? And that show is at the kind of overlap of Musk and Trump. And now the House is divided. And they had a recording, but it was not released. I took some satisfaction in that. Right? Like when narratives are pierced and threads splinter, you got to choose sides. What side are you on? I feel like Elon, he's more American than most Americans. He's created extraordinary wealth, hundreds of billions of dollars in value. I'm not even a Tesla stock fan. This is just a fact. He's created enormous innovation in driverless cars, in technology to help people walk and have vision again, to do high-speed underground trains, to build a renaissance for American space and Star Satellite and Inspire Engineering. And then he went to government. He went to Washington like Mr. Smith and said, I'm going to go cut costs. He slept on the floor of these federal buildings, brought in talent, which was not compensated. And he got a rug pull. He went in with the mandate to cut costs, which the American budget desperately needs. Not desperately. We'll get by, actually. We'll come back to that. I think we'll actually be okay. But it's the right thing to start to rein in this excess. And he was rebuffed. So I feel bad for him. I was surprised that Elon took very sharp blows to Trump. You don't do that. You don't take a shot at the king. What's the expression go? If you take a shot at the king, best not miss. Right? You don't. I mean, he said that the reason the Epstein files weren't released because Trump is in them. He doubled down on that. Yeah, he had some other claim that was pretty incendiary. You don't do that. I think it was just a bad move. I was surprised to see that today Trump said he wishes him well. So far, so good. Elon is saying that he wants to start a third party. You could kind of see the kind of people who'd get around the hoop for that. And starting a third party is hard, but he's actually credible. He threw over $100 million in the campaign. I'm sure the social media algorithm was modified. He can help shape outcomes in a material way. Ultimately, I think competition is good for the United States. Competition in general, whether in athletics or academia or business or politics, competition is just good. So that I think however this plays out, it'll be good. Last parting thought. There's a scene in Dante's Inferno, the ninth circle of hell, where the count is like eating and cannibalizing like the archbishop. And it reminded me of that scene. It's about kind of intertribal warfare, the consequences of disloyalty. And it reminded me of that. It's you should be able to tolerate dissent and get back to civic debate. It's true for the protesters on campuses that are disrupting education, but it's also true in, I think, Trump's inner circle. You got to be able to have debate. You got to have like a Lincoln cabinet mindset where you're trying to find the best ideas and let truth rise to the surface to make the best decision you can.
Yeah, I mean, overall, like it's funny. Two things I noticed. One, Kash Patel, the head of the FBI, was in the middle of recording a live podcast with Joe Rogan when all this started happening on Twitter, and JD Vance was in the middle of recording a live podcast with Theo Vaughn and they were both like, "Oh God," like I'm not like blah blah blah. JD Vance like commented a little more than Kash Patel was willing to, but like it's just funny, like the whole ethos around like people calling like saying Trump helped won because of these podcast things, and then like these guys were in the middle of doing those podcasts when all this dropped. But I think like overall, my overarching view is like Musk wants to cut costs, he wants to save money. And like that seems to be the real big blow up here. Like the big beautiful bill is going to add to the deficit. I know Trump camp will just say they're trying to save and continue the taxes that were that they did, the Tax Cuts and Jobs Act. They just wanted that to continue, and without it, there would have been a huge hike in taxes for everyday Americans. Okay, that's true, but it doesn't matter. Like you let Musk do all this work, and yeah, he saved billions, maybe tens of billions of dollars, and then you're just going to add a couple trillion to the deficit, arguably. There's a lot more that can be done. This isn't everything in the bill, but I think this kind of goes back to like, what does Lynn say? Like nothing stops this train, right? Like this is like the Republicans, they are going to blow out the deficit because they're going to focus on tax cuts, and the Democrats and liberals are going to blow out the deficit probably too, because they want to give more money and do more things like Medicare, Medicaid, any sort of thing along those lines to help everyone essentially. So they want to hand money out and tax the rich, and all of it is just like spending more money. And like if you are going to be someone that's going to go in and preach like some level of austerity and not spending money or not giving tax cuts, you're never going to get elected. So like we're just kind of like on this path where like nobody's going to stop the deficit spending train that we're on. Sal, you're nodding your head. What are your thoughts overall on this whole process? Like how does it impact crypto or macro at all, or do you disagree or agree with anything Ram and I said?
No, I agree with the setup. I just think it's a disappointing outcome to what was kind of a source of hope in two regards. Like obviously one on rein in, spend, put some arms around excess, and then hopefully push forward into a new path. And I think this is the story of how a brilliant entrepreneur hits, a brick wall in the context of government and mixed incentive schemes. You were highlighting, James, like the incentives of politicians to remain elected, whether Democrat or Republican, are not directly aligned with the mandate that Elon was pushing forward alongside Trump. And I think Trump, in a relatively diplomatic fashion, recognizes the reality of what the current state looks like in both the House and Senate, and played into favor to the best possible outcome that it could. And it seemed to me like Elon, after 130 days of, as Ron was describing, sleeping on the floor and making huge trade-offs in terms of the energy, effort, and time that he could put forward into his companies, hits huge frustration. And for me, it was disappointing to see it boil over in such a public fashion, because I think some of those points around the Dante's Inferno analogy, like there may not be, full reparations around this. And so maybe a parting of two aligned camps. I think he'll walk back the discussion around the third party concept, although candidly, I would support that. Part of this issue set we find for 30 years of stalemates is because of a two-party system. But That's been a really hard challenge and has been tried many times over. So overall, hopefully they can mend, but pretty disappointing to see the public spat. I was walking home from CVC. My wife was calling me, telling me about the spat because it had overflowed from X to Instagram and to TikTok and all those things. I'm just like, oh man, couldn't believe what she was telling me. But
by the way, did you see Elon also gave a nod to JD Vance? He actually, I think the second defense is he supported like Trump's impeachment in a tweet. I was like, what are you doing, buddy? You're bringing the wrath on. You don't like, those are two serious shots. What apparently started this is over the weekend, Elon's preferred leader of the space agency at NASA wasn't appointed, and that person controls budget for SpaceX. And it's like, come on, how does Elon not get the win on that for everything he did? So I could see being pissed on that account. And now what I read this morning is that NASA is looking at alternatives, like the NASA director is looking at alternatives, and now you're seeing competitors to SpaceX like Rocket Lab, I'm long Rocket Lab, by the way, go up a couple points because of the potential share shift in revenue.
Yeah, I mean, the New York Times actually did a podcast talking about this, and what they came away with, and obviously, like, there's people here hearing that I listen to the New York Times podcast, probably freaking out, but so they do a lot of good work over there still, despite some of the episodes. Like when they cover crypto, you listen to it, I'm like, you didn't talk to anybody who knows anything about this. Like, you have no idea what you're talking about, and they have these guests on that are supposed experts. All right, I don't want to go down the sidetrack, but it's crazy. But they basically said it was the spending first, and then the Isaacman thing, who was supposed to run NASA, which All In actually had Isaacman on their podcast this week to talk about like not being the pointy, and he was very cagey around it. But like, one, he sounded like he would have been awesome to run NASA. Like, I loved everything that guy was saying. It sounded awesome, but it really came down to the fact that he had like contributed to a bunch of Democratic politicians, and Trump was like, I can't have this guy running NASA. But at the same time, it's the guy that Musk wanted. He probably would have been very good, though maybe would have leaned a little on SpaceX. But then again, SpaceX is miles and miles ahead of everyone else in the industry. Yeah, I mean, Steve, you didn't get a chance to chime in yet. Like, what are your thoughts, real quick, on the Musk-Trump breakup and what it could mean?
Yeah, I had a couple. I mean, one, first, I guess I'm upset that SNL is done for the summer, because this week's episode would have been epic. Ron, you said it, Dante's Inferno, but actually when all this happened, it made me think of House of Cards, season 2 in particular, when Frank was sort of fighting with, what was his name? Raymond Tusk, that billionaire from St. Louis that was like a backer of the president. And they kept going back and forth and having this like unfragile alliance, or I guess fragile alliance is the right way to say it, until it eventually broke at the end of season 2. And Underwood won. I forget the exact how it all worked out, but Underwood ended up winning. And I think Tusk went to jail or something like that. Musk and Tusk, that's actually kind of funny. But the thing is, it was a good reminder, I think, in some ways that, like, although these two are obviously very powerful people, they are not equal in any way. And if you go back in history, like every time that there's like these oligarch billionaires that are trying to partner with the president or prime minister or whatever, and then there's a breakup, it's the oligarch that suffers. Like, do you guys remember, like in 2020, when Jack Ma criticized Chinese financial regulators and they abruptly pulled the Alibaba IPO? It was like in the summer of 2020, and then we didn't hear from Jack Ma for like months or years until that. I mean, this happens over and over again, and it's kind of interesting that Musk did not anticipate that coming, because when the breakup happened, Trump was going to be the one that's going to win, because they have the guns. Like the U.S. government that's where the actual power lies, as we learned from Frank Underwood, and at some point, I mean, Musk probably has some dirt on Trump, but Trump doesn't have to face the voters again, so that was kind of inevitable. And then the one other thing that I thought of too, because I know we want to move on, it sort of underscored for me, going back to crypto, how important it is that we get crypto legislation passed while we can, because at some point, like, you need Congress to settle these rules and laws for now and hopefully for always. And if we get a new government in place, a Democratic government that wants to appoint Gary Gensler 2.0, they can do that. And again, like, the power between private industry and the government for now it falls in the government. So I know crypto did pretty well under Gensler, all things considered, but it's really important to get this settled now because a new government could come in and do a complete 180, just like Trump did to Biden's policies.
Yeah, I mean, Stephen, I think you hit the nail on the head with this because that's actually the biggest risk to this space in particular is a broader derailment of policy. If there's fragmentation and ultimately the spending bill doesn't pass, the next iteration becomes priority. Then you have to fight upstream around stablecoin regulation and getting the Genius Act through. So I think distraction and disorientation from this is actually the biggest risk towards the legislative agenda for crypto.
I don't think it'll slow it down. Yeah, I mean, I don't think this will slow it down. But one last fictional references. I love the Frank Underwood one, but Game of Thrones reference when Littlefinger confronts Cersei and he makes a threat and he says, "Look, knowledge is power." Then Cersei has her guards put a sword to his neck, and she says, "Power is power." Anyway, last fictional reference there.
I'm sure we'll find some more in the next hour for the other topics.
Yeah, I mean, I just hope this settle. I mean, one, yes, Sal, you said it was disappointing. At the same time, I love watching it blow up. It was so entertaining, but I agree with you. It's just kind of sad that two men were going to blow, arguably two of the most powerful men in the world. Like you have the richest man in the world who literally has the most successful rocket company in the world, one of the most successful car companies in the world, at the president of the United States, and they're just going to blows like high school kids on social media. I get entertaining, but it'd be a lot better if there wasn't these types of people doing it. Let's move on to the Circle IPO. So Circle IPO'd, I think, was $31, I think. It's now trading at $118 a share, roughly just under $26 billion valuation. I guess I'll turn it over to you guys. Let's go to Sal first. What do you think of the valuation here? Do you think $26 billion is the right, right valuation?
I mean, we were chatting about this on the interlude as we were coming into the episode, but Ron pointed this out. It's where crypto speculation hits public market sentiment. There has been a lot of stuff floating around in X comparing, value of Coinbase as it relates to value of Circle in context of the revenue share agreement they have, which is an interesting comparison and potentially arbitrage opportunity. But I think it misses the point on the broader competitive landscape that stablecoins will enter over the next 2 to 3 years. So I think it's a very exciting moment for everyone who was in the prior rounds of Circle that backed Jeremy and Sean and team through multiple pivots and iteration, even pre-existence of USDC, because they pulled a rabbit out of the hat multiple times to see that company through and ultimately found product market fit at scale. So it's a huge win for the industry. But where it sits today, I would say, is not consistent with how we look at fundamental valuation, especially on a forward outlook.
Yeah, I mean, you just look at this and it's like the valuation is 50% of the US, the USDC in circulation, essentially. Which I don't know how you get into that. I mean, I know Tether and Circle are very different businesses, but I look at them and it's just not only that, but Circle's costs and expenses are an order of Tether is so much more profitable, it's not even worth discussing. So I'm looking at this valuation and I'm thinking, damn, what do you think Tether would be going public for if they ever IPO'd in US markets, which I would bet that's never going to happen. But what are your thoughts, Ram? Do you think it's overvalued right now at $18 a share?
Well, I think what's the trailing PE ratio? I think it's a balmy 363 times trailing earnings. So it might be a little bit overvalued, right? It's an on-chain digital bank. Banks are usually valued at price to book value. Competition is coming. There's a distinction between a trade and an investment. Here I'm giving you the investment lens. Okay, the investment lens is, it's overvalued. The competition is coming. I'd love to get Austin Campbell's view here. He's one of the my favorite humans and very sharp on stablecoins. I caught up together with him last week, and he said, look, imagine the big banks get together and launch a stablecoin, and they have distribution. They can integrate it with their offerings. They can integrate it with Zelle. That's going to happen. They're going to approach Coinbase. They can provide distribution. They can integrate. in ways that Circle may not be able to. Stripe can do the same. And Circle's margins are high because they're paying $0, zero payment for holding digital currency. That has to change. And the innovation is that now you have digital currency in your wallet that accrues interest. That's an amazing innovation. To have digital currency just accrues interest, like the concept of having a wallet where you get more dollar bills over time when you hold it. That's the metaphor. That's the analogy for what this is. But you're now seeing a proliferation of stablecoins. Stablecoins are like the hottest theme in venture capital, which probably means you want to run away from the hills as a venture investor. But you're going to get a bunch of players enter the market, and they are going to compete on yield. I'm having a number of conversations with stablecoin issuers because we invest in private yield generating opportunities at Lumina. So stablecoin issuers want reliable, enduring sources of yield so they can pay out to their end customers and differentiate their product offering. That's going to happen. Tether's got a better moat and they're better positioned. They own the international scene. They're linked up with Cantor and Howard Lutnick. They don't need any capital though, so that capital raise is not coming anytime soon. But an amazing success. I think the other take is that this is going to re-liquefy venture markets. You have the CoreWeave IPO, which was also this commingling of crypto and AI. They started as an Ethereum miner. And now you've got this other IPO. You're going to see a few more. You're going to see Kraken, for example. What about Chainalysis? What about a Falcon X? That's going to reinvigorate venture capital ecosystems by creating distributions to LPs. And the LPs are saying, show me DPI. They're saying, show me the money so I can re-up in your next fund. And that's very healthy for the venture ecosystem within digital assets.
Yeah, I mean, well, you brought up venture. Before we go to you, Steve, I don't mean to have you go last again on this topic, but you brought up venture and you said, I'm curious, Sal, what are you guys seeing on the stable coin? How many, what are you seeing in that side of the investment business?
Yeah, I mean, it was a dry spell on DPI to everyone. And the conversation that you kept hearing in the fundraising context was the impact of the denominator effect on institutional investors being overweight private markets with 21 and 22 marks rolling into the portfolio diversification models, no DPI and liquidity to re-up and reallocate, which led to, I don't know if you guys saw the cartograph of venture raises by emerging managers through the last 15 years. In 2025, albeit only halfway through the year, tracking to 2009 figures for emerging managers. And naturally, that's a pretty wild comparison. I think we'll benchmark out slightly higher because the second half of this year will be driven by a number of these IPO and M&A events. But the fundraising environment was super, super hard the last 12 months, largely driven by what Ron was describing, which is investors not getting liquidity to re-up. So I'm hopeful we have a little bit more time left in our fundraise. I'm hopeful it gets easier. I don't want to be a fool in that hope, but it does seem like this is momentum towards a broader wave of public market offerings and probably continued M&A traction. So we'll see where it shakes out. But if you remember, even 6 weeks ago, post Liberation Day and macro trade stuff, there was a whole conversation as to whether or not Circle would actually even pursue the IPO track at this point, or they would delay it. And I think they took a bold step forward and look at how they've been rewarded thus far in public markets. So hopefully that shows a number of other companies like Kraken, that the path forward might have uncertainty around it, but public markets are clamoring for exposure to mature companies in this space that can really be looked at through a fundamental lens, whether or not they're valued appropriately based on that data.
Yeah, I mean, we were looking at Circle as getting acquired by Ripple or Coinbase potentially. But real quick, Sal, before we go to Steve, you talked about the fundraising side and the distributing capital from investments, but how many deals are you seeing that are in the stable? You said you were expecting a lot of competition in the stablecoin space. I'm assuming that's because you see a ton of people trying to build in the stablecoin space and potential deals and PowerPoints that come across your desk. So can you talk a little bit about that too?
Yeah, we've seen an inordinate number of deals that are playing in the stablecoin space at different layers of the stack. Maybe 6 to 9 months ago, there was a lot of conversation around how do we design application-specific or purpose-built layer one networks? We've done a project in that space. And then more recently, we've seen a bunch of projects that are looking at XUSD stable coins, which candidly, from a market traction and adoption perspective, has been quite dismal. But you are starting to see a little bit better product market fit for specific payment corridors. So think US to Latin America, some of the Asian kind of jurisdictions that collaborate tightly in a trade context. So I am of the opinion that stablecoins broadly are generally overvalued from a deal perspective right now. We've been super prudent, and of 20 deals in this fund, have one in that category. And I think it's arguably on equal terms in terms of innovation and infrastructure versus what you've seen Tesla, mixing words, Tether do with Plasma. So that project is called One Money from Brian Schroeder, who was the former CEO of Binance US. But yeah, the deal values are quite high on stablecoin projects. Species have been clamoring after them. The bridge acquisition set the terms in terms of what the forward outlook on an M&A path could be. So we'll see how it goes, but generally proceeding quite cautious on our side.
All right, Steve, what's your take on Circle? Do you think it's, I mean, I don't know if you have a strong opinion whether it's overvalued, but what's your view here?
It's interesting. Maybe the IPO had me think of a few ideas came to mind. I mean, for one, we were talking about power in the first segment, and that I started thinking about that again, just in relation to the profitability of USDC for Coinbase vis-a-vis Circle, which I know we talked about. I mean, there are some numbers like Coinbase might be make 10 times, USDC might be 10 times as profitable for Coinbase as it is for Circle, which seems to be kind of crazy and unsustainable. Two, I actually did a profile in Jeremy Allaire for Forbes a couple years ago, and in that story, I interviewed a congressman who has to remain anonymous, but he sits on the House Financial Services Committee, and I asked him the very question that I think, Ram, you mentioned, like what happens when J.P. Morgan and Wells and all these other banks, if there is legislation, if they decide to launch a stablecoin? And this congressman said to me, they're just going to crush Circle. And it's funny, Tether thinks the same thing. I interviewed Paolo because I've done multiple stories on him too. And Paolo said the same thing to me, but he said, we're focused on international users, like let JP Morgan come and do their thing. They serve a different client base. So all that was kind of fascinating to me. But the one thing I just wanted to point out quickly too is I actually interviewed Circle's chief strategy officer, Dante Disparte, on Thursday, I believe. The whole conversation was on the record. I wrote a story about it, but like most things you guys know, I can only fit a small portion of what we're talking about in the story. And a couple things I wasn't able to fit in. For one, I actually asked him what he thought about the big disparity between Circle's profitability and Coinbase's. And I actually asked him twice, and he kind of demurred. He didn't really want to get into that. But then I also asked him, this is a wildly successful IPO. And it seems in many ways to be divorced from just the pure financial fundamentals that we've spoken about here. So I said, like, what was the story that you sold to the investors that they're looking past that and giving you credit for much more than just your balance sheet may suggest? And frankly, it was a little bit tough. His answer, it was a little bit tough for me to read. I mean, I know stablecoins are just these homogenous products. But they're not entirely, because Circle is behind the scenes. They're spending millions on R&D to build out infrastructure, to support 20 different chains, to make it easy to move tokens from one chain to another, integrations with different payment providers and platforms. Regulation is a big one. I mean, they're MiCA compliant. They're compliant in the UAE. They're compliant in Japan. I mean, they're doing all these things. And the big bet is that it's all going to pay off, and they're going to have this critical mass scale that will give them a moat against the money center banks. I mean, that plus hype, it must be what all of these different investors are betting on. But these valuations are so far divorced from the fundamentals that there's going to have to be a climb down no matter what. I mean, nothing can stay like this forever.
Yeah, you brought up the Coinbase versus Circle divide. I mean, Jeff Park had a great tweet, friend of the show from Bitwise, talked about like there's an arb here to play. I mean, just looking at this, it's kind of insane. So like I said, Circle's like just about 26 billion in market cap. and Coinbase is like 65 billion, and they get a lot of their like profitability from the yield that I think they split 50% of the yield with Circle, and I think anything that's actually minted on Circle, they get to keep us like all of the yield over a certain period of time. But I mean, it comes back to me like a huge part of this business is tied to like rates. So if we ever get into a situation where we'll talk about macro next, but if we get into a situation where rates get cut, I mean, their profitability is getting hit hard, and their expenses, you were talking about it, Steve, and they didn't really give an answer. They pay their executives extremely well. Their costs to like the people that work there, they have a lot of people that work there, and they pay them very, very well, which is the main difference that I see. Like compared to like revenue or profit per employee. I mean, again, Circle's a very different business from what they're doing. You kind of talked about it, but like it's not even remotely in the same ballpark as what Tether is doing. So yeah, there's definitely going to be some arb there.
A bit more on the banks. The other edge that the banks have is they can rehypothecate. So today what Circle does is they invest in treasuries. If a bank can rehypothecate and they have on average 10 turns of leverage, if you look at the ratio of their liabilities to equity, they can make more money. So they can make a more lucrative bid to Coinbase. And Coinbase is the distribution partner. Yes, USDC's built brand, but again, consumers are savvy. They're going to go to whatever has the highest yield and the highest quality, and they're going to go to other brands they recognize too. And those banks will install those stable coins in their offerings. They'll make them native. So yeah, I think Circle's in a tough position. By the way, 20% of Circle's market cap traded today. So this is like a meme stock. This is not a oh, what did the investors get on board with? This is just crypto interacting with public equities.
I question there, Ron. Like, isn't the stablecoin bill going to prevent them from doing any sort of rehypothecation and
it should.
Yeah, okay.
It should.
Fractional reserve banking.
Well, so if you're a bank issuer of a stablecoin, though, why would you be prevented from rehypothecation? That's your bread and butter business. If you want to expand lending to Main Street, you should want to have banks involved here. Otherwise, all the Circle deposits are financing the largesse of the federal government.
Yeah, there's no way that the Genius Act is going to allow rehypothecation. I mean, it's a very strict regulatory. The law is going to be pretty narrow. And again, one other question I asked Dante, which I know is on the minds of lots of people, is there ever going to be a world where they're going to be able to share yield, or where they're willing to share yield and with their customers, because it's so high, at least right now. And basically the answer he gave, which I agree with, is that would invite a much wider regulatory sort of net or set of regulations than what they're dealing with now, which is already somewhat complicated, because then it's technically a security. And I know banks sort of have exemptions from having to register with the SEC to offer things like savings accounts and stuff, but it becomes much more complicated, and that would lead to rehypothecation and all those other things. And frankly, at least I got the sense from Circle, is they don't want any part of that. I mean, aside
they can't. They're a non-bank, so they can't.
Yeah.
So they're at a structural disadvantage.
Yeah. Before we move off for this topic, do we want to? There was a lot of backlash with the way that the IPO was allocated. I mean, number one topic on this is Jeff Dorman from Arca had a long letter out there that was very aggressive and upset about the way that the IPO is allocated. I think they requested 10 million or 5. What did they request? 5 million and got 10 and got 135,000. So I don't know. I guess I'd be kind of annoyed there too as well. I mean, so, like this kind of to me like brings back to like the fact that the IPO is a very like Wall Street market. It's like a different market versus Circle, which is typically used to paying in DeFi. And like I feel like a Wall Street bank can't not like you're going up against BlackRock here. Like they're going to get the allocation, or at least a bigger portion of the allocation. So like there's this tension here between sticking with your DeFi friends and family, if you will, versus like you need to have a successful IPO. And Steve, you said it was a very successful IPO. I would argue that the bankers left too much money on the sidelines. I mean, they priced this at $31 a share. I mean, granted, people are locked up and who knows where it's going to sell. Everyone here has said basically they think this is overpriced, but like, it could come back down more into that range. We'll see exactly where things settle longer term. But Sal, what do you think about like that trend over there of Wall Street versus DeFi and the allocations that certain people got? And
yeah, I mean, I was saying this before. Like part of what Jeff was describing in that thread, was around like in the context of crypto and Web3, there's all of this ecosystem incentive alignment and people who are backing, businesses who are backing each other have aligned incentives towards outcomes. And that was at a mismatch with how this IPO roadshow and allocation structure came to play. And so just Wall Street clashing with, ecosystem incentive structures. And I would be super frustrated as well on the allocation, but not surprised because every investment banker that's involved in this roadshow has 5 or 6 more IPOs lined up and is looking to pad the books of all the different buyers to make sure they have a seat at the table in the next one. So, empathy for the frustration. I think he ended up pulling the tweet thread down, but I'm not surprised that that's how this shook out.
Yeah, I feel bad for Jeff. I can share a bit more how Wall Street IPOs work and share a personal anecdote. But if you're an IPO banker, like your primary clientele is not the CFO who's doing the first and last IPO most likely. You take a company public once. It's the buy side, because the buy side has to show up for every new deal that's offered. What the buy side wants, the buy side gets. That's actually the banker's primary clientele. So the investors that get dibs on the allocation table are those that make the most money for the bank. Who are those? Those are players like Point72, Millennium Technologies, Citadel. And you'll notice a number, if not all of those players, are also flippers of the IPO. They're not long enduring capital. So it's actually not the best capital for an issuer. An issuer wants stable diamond hands that believes in the thesis. You can get that in a direct listing, like what Google did when they went public, and they didn't have an investment bank to bring both sides together. I love to see more of that on chain, by the way. Topic for another time. So I had an experience like this last summer where at Lumina, we managed to get on the cap table for Brad Jacobs. Brad Jacobs, like the roll-up king. He built Waste Management and United Rentals. Tracy and Joe interviewed them, James, a few times on their show. So we got
Great
on the
interviews.
cap table. Fantastic interview. The guy is like an uber mensch. He literally wrote a book called How to Make Billions. And you can only write that if you've actually made billions multiple of times, never went to college, just serial roll-up billionaire, built it with his hands and his tenacity. So we managed to get on the cap table at 9.14 like next to Sequoia Heritage, the Walton family, Duke University. These were like personal friends of Brad, like phone call money for Brad. We had an angle into the CFO. We raised $40 million into an SPV. We spun up in 2 weeks. These deals happen fast. Like, it's going to happen. The Circle, they're looking at M&A. 2 weeks later, they're going public. That's how fast these things go, right? And then I saw this article in the Wall Street Journal. I'll share it on the screen here. This is from July. This is 11 months ago, okay? It said Brad Jacobs, QXO, raises $620 million as Kushner to the board. And then what happens is I get a phone call 3 hours later. Like, Ram, by the way, your allocation, it got cut back. We're sorry. We're sending you wires back. Here's 90% of your capital back. That cost us, look at QXO now, it's $20 a share now. It's $9 11 months ago. So that cost our LPs and our firm millions and millions of dollars. It sucks. It's terrible. And we hustled. We did hard work. He did more than I did. Jeff actually helped make that business success. We just hustled to get on the deal. That was our value added.
Yeah, he stuck with them through SVB and all those other things. Like Circle was in rough shape at multiple times throughout this whole thing. The other one we didn't talk. You were talking about potential IPOs. Earlier this week it was reported that Gemini filed a confidential S1 to go for an IPO. Obviously, the Winklevoss Twins exchange. It was one. I have a list of companies I'm expecting to go IPO this year, and that was one of them. So that's good. But the first thing I thought was not very confidential. If somebody's breaking the news that a confidential S1 was filed, do you guys have any thoughts on Gemini going public? I know you guys multiple people mentioned Kraken, but Gemini seems to be next up.
Correct me if I'm wrong. I don't think confidential means it's secret that they're filing. I think it's just that they're not releasing
correct.
How many shares.
Yes, exactly.
Yeah. My thought about Gemini is really just, they went through hell with all the SBF, FTX stuff. They faced inquiries from the SEC, and I know that went away with the new administration, but DOJ with the EARN program. et cetera. And frankly, I haven't really heard a lot from them since all of that happened. I know the Winklevi are insanely rich just by themselves, and they're big
Did you
Trump
say
backers.
Winklevi? Is that like a proper term or?
I've heard it
That
before
was-
too. I know multiple people do it. I met the twins actually at Bitcoin Vegas.
That's just my long way of saying that I'm really curious to see what their numbers are going to be. I don't know what the rationale is for not releasing, like filing a proper S1 yet. I mean, maybe it's just that they want to see what the market looks like and time it, because they have to know, as encouraging as it was for the Circle IPO, that that is clearly like unsustainable. But I mean, their volumes are not particularly high, and their platform is relatively expensive. And I mean, they took a huge hit reputationally when they got tied up with Gemini and the Earn program and all of that stuff. So I'm really interested to see what kind of story they're going to try to sell to investors beyond just, hey, we're next in line and people are putting $500 million in random companies buying XRP. Why not give it to us? I mean, that's kind of what I'm interested in.
Yeah, I mean, the one few things I would say about Gemini, they definitely took a hit when Genesis, blew up with the FTX thing, and they had all their money with Genesis and the Earn program. The one thing I will say to Gemini, they're the only people I know, and at great cost to the Winklevoss twins and Gemini, the company, they made every single one of their customers whole that were in that Earn program in kind, not just dollarized. So a lot of the FTX people are like, they're whole, but they're whole at Bitcoin when it was worth, $16,000. So yeah, they got their cash back for what they held in most cases, but they didn't actually get it back. Where Gemini is, I don't know of anyone else that did that in crypto, which is, in my opinion, huge win. The other thing I would say is that the one thing I saw all over at Bitcoin Vegas, they just launched a Gemini credit card where your rewards can be in crypto. Typically, it defaults to Bitcoin. So that's another growth area. And the other thing I would say against, we got all these exchanges, Gemini, Kraken, Coinbase, their fee. Like I look at like the fees for like trading, and I compare it to like what I'm used to in the ETF world when I'm looking at spreads and transaction fees. And man, they are juicy fees. At some point, it's going to have to come down. So if I were an exchange, I'd launch now when they're still able to charge. Some of the recurring fees, even on Coinbase, I think is still like 3%. It's absolutely insane. That's like 1970s Wall Street fees to buy and trade stocks. Sorry, didn't mean to go on that.
No, I agree.
diatribe.
I think
Go ahead,
100%. This is all late cycle behavior. IPOs happen. The IPO cycle happens every couple of years. I wouldn't be surprised. It's a kind of a hypothesis that I have right now, is that Q4 would be a top in digital assets just by seeing the flood of new issuance and IPOs and, just the peaks in animal spirits that you're seeing emerge now. So just keep your wits about you. When Coinbase went public in April 21, that was the top in Bitcoin miners, which is kind of like a high beta leading expression on digital assets. And then Bitcoin started to follow a few months later in September and November. So I think your clock started, right? Maybe 6 months away, maybe Q4, maybe after these bills get passed and people have kind of peak euphoria. So I think it's important just to maintain perspective, just enjoy the ride. The last leg of these rallies can be very significant, right? The last 1/3 can be like half the rally, actually. But I think you got to kind of keep your head about you.
I think it's going to be interesting to see like what the relative pricing structure is of the next wave of exchanges versus where Coinbase sits today and Circle sits on a benchmark. And I just can't imagine that the euphoria that we saw over Circle continues to trickle down across the next 3 or 4 exchange category listing events. I do think they'll happen, but I'm just interested to see like at what point do animal spirits get exhausted over clamoring for the next, issuance opportunity. So I appreciate Ram's point of keep your head about you, because I think timing wise, we're looking out towards the end of this year, Q1 26. I do think there's going to be a pretty wild, explosive moment that comes in relatively short order. And if the IPO market continues through that time frame, it's just going to reinforce it. But we've all lived in this space long enough to know it doesn't last forever. So
great. One other point is Robinhood is focusing more and more on crypto. eToro went public recently. So competition is intensifying. Coinbase was the dominant leader. People rallied around Coinbase, especially when they were litigating or facing litigation for the SEC, really kind of both sides. Now you have increasing competition, so that should lead to fee compression. You have proliferation of ETFs, which is indirect competition as well. So it's a different backdrop than it was 2 years ago.
Yeah, that Q4 timing. I mean, I just think there's a decent chance we could see some altcoins get approved for ETF wrapper this summer, potentially. We're going to see basket products, in our opinion, approved this summer. But even still, like the deadlines for a lot of these other altcoins, there's like 10 of them on file right now. Is that Q4 time range that you guys are talking about, the final deadline, and we think they're going to be approved? So like we can see, like, it's not just the stuff you were talking about. In the ETF world, we could see everything.
One last anecdote. So in the .com era, and you guys remember this, 3Com spun out a business called Palm Pilot. Palm Pilot went public. It was worth more than 3Com, even though 3Com owned 99% of it. So these mispricings and arbitrage between related entities are phenomena that you see as you get closer to the top, kind of nonsense stuff. So, we are seeing something like that, to Jeff Park's point around the relationship between Circle and Coinbase.
Before we move on to macro, and then we'll wrap up, even though there's so many other topics we can get into, we got to hear from our sponsors who make this show possible real quick.
Hi, it's Matt Hogan, the Chief Investment Officer for Bitwise Asset Management. Each week, I write a 5-minute memo on the biggest topic impacting crypto. This week, I take a look at Circle's blockbuster IPO and what it tells us about how to build a comprehensive crypto portfolio. The TLDR: if you're just holding crypto assets like Bitcoin and Ethereum, you may be missing one of the most valuable categories where crypto is going to accrue value. Check out how to fix that at bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo.
Carefully consider the extreme risks associated with crypto before investing.
All right, guys. Let's move to macro real quick, I guess. Ron, what are you watching right now, macro? We talked a lot about jobs last time. It looks like hiring slowed in May a little bit. So continuing of this, like, not hot jobs market, but also not completely dead. And anything you're particularly watching with rates and markets and macro?
Yeah, look, so much bad news is priced in. It's almost like this market's inoculated against all sorts of risks. And meanwhile, you've got Ray Dalio, who keeps pounding the table around the imminent demise of the U.S. debt. I don't think that's going to happen. Larry Summers also was critiquing the big, beautiful bill and tariffs, saying that could cause a recession. I don't think that'll happen. I'm not a fan of tariffs. I'm not a fan of excessive spending either. I just think it's hyperbole. They're just overreading into it. So what are the risks facing the markets? Well, one is tariffs. I was at Best Buy this weekend to just take a quick look at what prices are doing. Prices didn't go up. I talked to their sales associates. Prices didn't go up there. They are going up in auto. So auto sales were accelerated forward. Parents bought cars for their kids. They just want to get ahead of it before even their kids were kind of age to drive. So auto inflation was up 2.5% year over year. So you are seeing that and that's a big ticket item. So large durable goods, you are seeing that. But in areas where you have deflation and natural deflation, like semiconductors and plasma TVs and electronics, you're not going to see that. And that, that makes sense. So the market seems to be immunized from tariffs. Austerity's off the table. It's immunized from that. Inflation's still declining. I expect you'll get a summer whiff of inflation. The claims data looks fine. I wouldn't be surprised if there's some volatility in unemployment, like some bad news that's temporary. Seems to happen every summer. But a lot of people are just overly bearish in a backdrop where you've got strong earnings growth and baby boomers of $60 trillion in assets that are spending. They're spending on cruise lines and travel and leisure and restaurants. And so overall, I don't see economic weakness. I don't see economic weakness. Yeah, CapEx spending is up. The government spending, consumers hanging in there like a champ. Consumers are changing their consumption basket. Yes, that's happening. But overall, I think things are fine. And productivity growth is a story that Ray Dalio and Larry Summers are getting wrong. The AI story is real. We are seeing innovation. The adoption rates are faster than we've seen of technologies in the internet. It took 10 years for online trading to become a thing. We're moving much faster. And that can be a provider of relief for the fiscal spending and inflation issues that we have.
Yeah, I mean, I think that's a good point. I mean, overall, it comes down to like we're going to keep spending, and it's a matter of whether we can grow ourselves out of it. It seems like Besson, even over the last couple of weeks, has changed his tune on that topic. He seems to say we're going to have to grow ourselves out of it, which is like AI, I guess. Like it literally comes down to AI, in my point of view. But Steve, I mean, if we go back and we look at what's going on with trade, the most recent reports that have come out, like our trade deficit's cut in half. So like your difference between your imports and exports, basically because we stopped importing stuff because of the tariffs over the last few weeks in the most recent round. So how much of that is actually stopped versus going to pick up again now that there's a 90-day stop? The other thing I would point out is that U.S. and Chinese trade officials are meeting in London, I think today, to like kind of hash out a bit of a deal here. So what are your thoughts here? I mean, we're looking at Chinese exports they're at the biggest collapse since 2020 to the U.S. specifically. So like basically trade between the U.S. and China has all but halted, not completely. So Steve, what are your thoughts on the macro side of things?
It's really easy to cut your deficit when you just stop buying things. I have a few thoughts. I mean, I'm really interested to see what's going to happen with the talks between the U.S. and China, I guess today and tomorrow. I know Latnick's there today. He wasn't there for the first round. That apparently went well, but we all kind of saw how that turned out. I mean, we've spoken about this before. I don't quite know how this deal is going to work. I mean, China, because of their housing market crisis and all sorts of issues over there with declining consumption, I mean, they are forced to support their manufacturing base. And that's exactly what the U.S. is trying to curtail so we can grow our own. I don't know quite what that deal looks like. And so I'm kind of with Ram. I mean, things are just status quo. I believe we get April's inflation numbers on Wednesday, and I'm really interested to see what will happen there because I do think expectations are a slight tick up, which could lower the chances of the Fed reducing rates anytime soon. And the other thing that's kind of on my mind a little bit, aside from just the Trump trying to appeal that international court, I forget what the exact name is, that ruled his tariffs invalid. July 9th is going to be here pretty soon, and that's the day when his 90-day extension on the – I'm sorry, is it July 9th or July 2nd? I forget, but regardless, it's going to be here soon.
First week of July.
First week.
Yeah, we'll say that for now.
Thank you. When his 90-day extension is going to expire. And I'm wondering how companies and traders are going to approach that and when they're going to start incorporating that into their strategies and models. Because I guess if I'm Trump, I'd probably wait until like the very last moment to have an extension, saying right up until then, no, they're going back into effect. But
they're dismissing it. They're looking through it.
Taco trade, right?
Yeah.
It's the taco trade. Trump always chickens out.
That's all it is.
I get that, but I mean, he made such a big deal about this. I do you think he can really just say another 90-day extension? He's too proud, I think, to do something like that. As much as I do like tacos, so I'm
the burrito trade is the opposite of the taco trade. The burrito trade is like the overreaction that Trump would have in response to the name of the taco trade. The biggest.
Did you see that
taco trade?
Did you see his response to the reporter asking about it? He was like, I was like, oh my God. Like just asking about that might have made like global trade worse.
Don't bring up the taco. Don't bring up taco. Just ixnay on taco.
Yeah. So yeah, that's kind of what those are the things I kind of.
They're slow walking this, right? Japan slow walking this, Eurozone slow walking, and then the Eurozone suddenly started trying to move faster. But how do you do that? There's so many different member countries with differing goals and different agendas. China slow walking it. They're all slow walking it. And Trump has shown his hand. And so everyone's shown their hand here. They're like, yeah, we want to get deals done. And they've chosen to embrace markets, which is great. I'm glad they chose to embrace markets. Glad they want to get deals done. That's the right message for the markets.
Yeah, I mean, Trump jumped when the bond market, what he called yipped, the yips in the bond market. And I mean, it's just like, all he needs to do is show progress and be like, oh, we're making progress. We highlight certain parts of the deal and agreements they've come to. And it doesn't actually have to be in anything in writing. And he can save face. Yeah. Like he's very good at like making things, at least to his base and to certain people, that he's doing exactly what he's saying he's doing, even if he isn't. And that's what I assume that's what he's going to do. And it's going to be more taco side than the burrito side.
One data point to share with you also, in Trump Trade War 1.0, which was Q4 2018, you had a 19-20% drawdown in the major indices, and then you had a sharp, furious rally like you're seeing now in Q1 2019. However, in Q2 2019, you had another mini correction due to a renewal of tariff war back and forth with China. So those scenarios are there. Don't be complacent, especially like now. Probably I wouldn't be complacent now, because on the 16th the corporate buybacks stop, and now you're in the middle of the month. The seasonality is not as favorable, and you're probably going to set up for more breadth expansion rather than more expansion of like technology games.
All right, Sal, what's your macro take? I mean, you have it from both sides, right? You're seeing a bunch of deals and you are like trying to raise money. So you have like a little unique insight that I guess Ram kind of sees a little bit, because he's always trying to raise money as a wealth management side of things. But what's your macro take?
Yeah, I mean, I'm kind of aligned in certain regards. I'll pick up at where Ram left off. Like, we have what we're looking at, no more than 30 days until the end of this period. Everyone's slow rolling. I think the volatility bands that we would see following, either an aggressive reaction from Trump, which I think is more likely. I don't think he's going to roll over and, push out another 90 days here. But I think the impact on markets would be less significant than the drawback that we saw in April. I'm more interested to see how employment data shakes out over the next 60 to 90 days. It'll be an indicator of where and when we start to see any expectation of the dot plot coming, towards more favorable rates. I'm in a not complacent, patient wait and see mode, and I think the second half of June is going to be quite telling. So,
yeah, all right. So that's it for macro, I guess. Anyone have any last minute macro things before we jump on to two really quick topics and wrap up? Go ahead, Steve.
Just one quick small thing, because then I have to drop. But my last answer, I was talking about April inflation data, actually May. So I just wanted to make that one quick clarification. I'm not sure if anyone else caught that, but I wanted to.
I didn't catch it, so I hope that makes you feel better.
Anyway, thanks everybody for watching and listening, and I'll drop off now.
All right, thanks, Steve. All right, yeah. Let's be real quick here. Let's get a quick take from Sal, mostly because Ram and I have talked about our views on this topic a lot. But really, it's just treasury companies, Bitcoin treasury mostly, but also some altcoins. I'm curious to hear what you think, Sal. But I mean, just some stats here. I mean, Strategy just did another like $1 billion essentially for purchases. MetaPlanet did a $5 billion stock rights program and surged 22%. So MetaPlanet out in Japan is doing extremely well. And then also, like, if you just look, I'm on Twitter, obviously, and I feel like every day I'm hearing a new company buying Bitcoin for the strategy, or entering a new treasury strategy where they issue debt to get or raise capital to buy Bitcoin, or somebody who's already been doing it a little bit is leaning further into it. So here's some stats from this account I follow on Twitter, but I started following him in the Bitcoin ETF race. But from June 2nd to June 6th alone, he has 42 updates on this exact topic. 16 new treasuries added. So that's new companies doing this just in the 1 week. 16 companies added Bitcoin, totaling 4.4 thousand Bitcoin, 4.5 thousand Bitcoin almost. 11 companies announced for future purchases worth billions of dollars, including 4 that haven't officially launched yet. So like, that's 42 updates of these different companies that are doing all this different stuff. Obviously, the big dogs are Strategy and MetaPlanet and some others that are 21's coming to market. But I'm curious, Sal, from your point of view, like, what do you think of all these things? Because again, Ram and I have talked about this a bunch, but I feel like we couldn't not at least talk about this a little bit on the show today with all the announcements we've seen.
Yeah, there's kind of like 3 points in my mind on this. Like, point one is, and you've seen murmurs on this on X, but at some point there is a break and a supply shock, and we've been monitoring Bitcoin held on exchanges, which has plummeted in recent weeks and probably will only accelerate if this momentum continues. We know what that looks like. We've all seen blow off tops in this space. Candidly, outside of the rally around the election period, we really haven't seen the type of velocity and price movement that we have in prior cycles, probably because of scale and the nature of capital participating in the market today as compared to 21 or 2017. But I do think at some point this sets the stage for a pretty aggressive move. The flip side of which is, a back of my mind concern around buildup of systemic risk over leverage in this space, and feeling like 0.1 is too good to be true, and relies on certain types of assumptions with relation to duration and time on maturity and debt obligations. So as I see like the really strong momentum, it always gives me a little bit of concern. And then the third point I've seen is just the emulation down the ladder. All the majors are moving towards a public company digital asset treasury structure. You saw what happened with the Ethereum iteration. We've already seen Sol Strategies go. I know of several others that are taking similar types of approaches and in assets that have different characteristics and in terms of mechanic design and inflation assumptions behind them. So I don't think the trend is going to stop anytime soon. I'm hopeful that we don't end up in a position where we have a build-up and a break, but it's been pretty remarkable.
I would be long. If you're long Bitcoin, though, I would stay long now, just tactically. Q4, I think, is a bit of a different story, and maybe even mid-July. Bitcoin is just flirting with all-time highs right now. That capital is going to go buy Bitcoin. If there's less Bitcoin on exchanges, then Bitcoin is more sensitive to that incremental bid, as you know. So it's by the way, fun fact, I read that Michael Saylor's average purchase point for Bitcoin is now higher than the 21 peak in Bitcoin.
Yeah, it's 70K now after his purchase.
Now, there you go. So yeah, I think Bitcoin's long chaos too. A lot of chaos out there, right?
Yeah.
I made the comment last time, like I was taken aback by the depth of the retracement that we saw post, Liberation Day. I don't think we're going to see that type of retracement again, even if trade wars flare up, coming first week of July. So I'm with Ram on this. Like I would be patient and stay long because I think the likelihood that we see a blow off move upwards is far higher than what we see on the downside, and probably of a greater percentage change in price. So
yeah, funding rates aren't elevated now. There's no sign of euphoria.
And retail's still relatively absent as compared to 21. Like it's not the same composition of capital that it was. And a lot of these institutional long duration bias investors are diversifying into retirement positions, taking a 5 to 10 year view. It's just different today.
I do think Ethereum is very interesting here though, because that's less crowded, and the narrative of a micro strategy for Ethereum or multiple coming online, I think can do really well. It's a nice catch up trade. I think Bitcoin and Ethereum are both very interesting stories here.
Yeah, I would say the only I actually agree with everything you guys are saying. I think like getting really low levels of Bitcoin on exchange can lead to those blow off tops. It'll make like the incremental dollar, as you said, could impact prices a little more. But I would also say like in the commodity world, the saying is like the cure for high prices is high prices, because more supply will come online. Though Bitcoin is obviously different, right? So in the commodity world, if you're growing wheat or soybeans or whatever, and prices are really high, farmers and people will spend more money to, grow that crop and take advantage of those high prices. Eventually, as more supply comes online, price comes down. The thing with Bitcoin now, especially with the mining subsidy so far down, is like that new supply is going to come from people like selling their Bitcoin. It's not going to be from like new Bitcoin created necessarily. But I do think like higher prices is going to create more sellers, and people are going to bring their money to their Bitcoin to exchange to sell. So I do kind of like discount a little bit of it. I don't think we're going to be in the same level of like blow off top just because the amount of capital you need to move these markets around. Though it is obviously at the incremental side of things.
We still have positive news to look forward to in terms of congressional action, exchanges coming online. My approach to Bitcoin now is I'm focused on off-grid Bitcoin mining through operators that are using cheap, free natural gas, and they're using that to mine Bitcoin. So that's my angle. It's like I don't like paying retail for my Bitcoin. I like finding a nice discount to that. So that's my approach here at this stage in the cycle.
Nice. All right. I'm just going to read off some stats about the ETFs, and then we'll wrap up. I don't know if you guys have any thoughts on the treasury side of things or Bitcoin pricing. All right. So real quick, the Ethereum ETFs now are like nearing in on $3.5 billion in net inflows. They had like $1 billion in outflows in that retracement you were just talking about, Sal. They've almost taken all of it back. They're at like 850 million in inflows, tons of consecutive days and weeks of inflows. The Bitcoin ETFs have way more than retraced their outflows. IBIT is now a $70 billion fund. It's one of the top 25 largest funds in the US. It is the fastest to 70 billion by like an order of magnitude. It did it in 341 days. The next fastest is like over 2,000 days, I think. Stat courtesy of my boss, Eric Balchunas. But like the growth here is just absolutely insane. So that's the first thing I want to say. Just those ETFs are doing exceptionally well. The other thing is Trump, True Social, filed for a Bitcoin ETF. That officially went through to the exchange. They filed an S1. So True Social is launching a Bitcoin ETF. The final deadline will be sometime in February. My assumption is it will probably not have to take that long to get launched. Yeah, those are the main key things. And like I said earlier in the show, we're going to see basket ETFs likely get approved in early July. I think there's a decent chance that we could see some altcoin ETFs, Solana, XRP, Litecoin, potentially. Those types of names approved in that time range too.
Is Maker?
No, there is no Maker filing.
So how do we get a Maker file? We got to call Vance. We got to get Vance on the show here, by the way, from Framework. People behind the Ethereum and Maker ecosystem. That'd be fun.
Yeah, get more in the weeds. All right. Any comments on that, guys?
Man, it's wild. Most successful financial product launches ever. I love to see the flows on the ETH side. I think it sets up really nicely with what happened with SBET. Yeah, I think Ethereum is still mispriced. So I'm excited to see where that goes. Last time I was here, I was saying it's a setup for a short squeeze. Sentiment was at all-time lows. You've seen major changes at the foundation, governance, communication, new personnel in place. A lot of chatter that's more positive today. And I think the institutional flows on the ETF side are reflective of that. So excited to see where that one moves.
Yeah, look, I think it's exciting. Like stable coins are here. You're seeing TradFi try to get their head around this. They haven't used stable coins as a customer yet. Now they're forced to reckon with it. At the same time, they see a bill that's going to advance stablecoin legislation. So it's there's like a gestalt shift happening in markets. You've seen Visa and MasterCard stock prices are down 1 point today, down more than XLF. So it's more than just beta exposure. Look, I know that's a drop in the bucket, but someone out there said, gee, maybe there's some risk for these legacy payment intermediaries or networks.
There's a lot of stuff happening, man. It's really exciting. And I mean, the money pouring into these things is just crazy. Anyone who's like completely doubted this space back in like 2016 needs to like do a complete rehash of what their thought process was. And I'm telling you right now, a lot of people on Wall Street still have the same views they had in like 2017. Like they have not readjusted at all.
Jim Chanos is shorting MicroStrategy still. He'll be right in Q4 25 after he's liquidated and creating the bid on the way out. Right.
All right. That's what we're going to end the show on. Rom calling out Jim Chanos. All right. Thanks for joining us for this episode of Bits and Bips. So thank you to all you guys on the live stream. And also thank you to anyone watching this later on YouTube or wherever you listen to podcasts. We'll be back in 1 week to discuss more about how the worlds of crypto and macro are colliding. Until then, everyone.